Well, with that, let's move on and discuss one key sector that's going to be in focus today, and that's the power space. The power sector regulator, CERC, released a draft paper on electricity generation tariffs, which will be applicable from the 1st of April 2024. The norms will be in effect for 5 whole years, so it's for the next entire cycle. And while a lot of the ROE levels have been retained, in some cases, like for power grid, there's a minor cut, and for hydropower projects, the ROE has actually been increased. So what's the potential impact and how should we read these regulations? We have Harshvardhan Dole, Senior Vice President, Institutional Equities at IIFL with us. Harsh, thanks for joining in. And I'm talking to you for the first time in the new year. So first of all, very happy new year to you. I just started going through your morning note where you're going with the description of these norms as very balanced. So can you expand on that and tell us, let's start with thermal power companies like NTPC. What's the impact?
Thank you and greetings to you as well. So if you actually go through the draft, the reason why we think it is balanced, it gives a regulatory stability. That means the return on equity for all the operating assets is by and large retained. For example, NTPC's existing units will continue to earn 15.5% assured rate of return. Power grid will continue to earn the same set of return, and so would NHPC. So there is a regulatory stability. What is more important is the regulator has sort of given a bait to bite for these utilities so that they can take risk and produce power at the peak time when India needs it the most. For example, in case of NTPC, they've said that in case your plants are able to operate during peak time, there is an incentive of 20 or something like 10 to 15 paise extra per unit, which is quite significant. Similar incentive is actually being given to NHPC in a form of additional monthly charge. Plus, if they're able to generate over and above what they're entitled to, there is an incentive thereof. So looks like the regulator has been forthcoming and trying to address the emerging trends rather than trying to fix the existing issues. So to that extent, I think it's all thumbs up.
Okay, so sorry, just to take that point forward, for NHPC, for hydro assets, where the ROE has gone up, is there an immediate benefit for stocks like SJVN or NHPC, or are you saying that it's only when you cross generation above a certain threshold? Is there straight away an EPS increase that comes in or not?
Yes, there is. So, for example, based on our initial assessment, looks like for NHPC, at least the EPS impact will be at least 3 to 4%. That's A, for the operating assets. For all the new assets, the ROE has actually gone up by 50 bips. So that should also get in at least 50 to 80 crores on a recurring basis. So there is definitely a 3 to 4% impact on NHPC's recurring earnings.
Okay. For transmission, there is negative news. Could you tell us why the draft regulations are negative for a company like Power Grid?
Well, I wouldn't say it is extremely negative for two reasons. One is the operating assets continue to fetch 16.5% assured rate of return. So there is a regulatory stability. For all the new plants which commission or new lines which commission beyond FY24 will earn 50 paise less rate of return. However, bear in mind, in case of Power Grid, all the new projects are bid out on a competitive basis. And only a handful of projects are awarded to Power Grid on a nomination basis. For example, the Leh-Ladakh line, which is a fraction in their overall portfolio. So again, it's sort of tweaking rather than a major negative. I don't consider that to be a huge negative. It's sort of some correction that probably regulator wanted to do.
Have you assessed the impact on NLC India after the changes that we've seen?
I think broadly, it should benefit NLC as well. A, it tries to fix the return on equity for the mining aspect. B, it also takes into account the plant availability factor for the innovative technology, which is CBFC technology, which has got teething issues while settling the unit. Their path for earning the threshold rate of return has been reset to a lower level. So that should address some amount of their under-recoveries and hardship encountered by them. So directionally, it appears to be quite positive even for NLC.
So overall, can you help us with, just to summarize for us, what are the top picks in the sector now and what is the pecking order looking like post the norms?
So I think the biggest gainer seems to be NHPC, followed by NTPC. And based on these tariff regulations, look like our conviction on NTPC has actually, in fact, gone up further. So that continues to be our topic in the sector. If at all one has to go down the line, then the other beneficiaries could be Torrent Power and CESC, which don't directly benefit from these regulations. But from the tone of regulations, it appears that the government is very serious in terms of implementing reforms in the sector. And these two stocks, in my view, are well placed to benefit from the reforms. So from a top pick perspective, I think NTPC, Torrent Power and CESC are the three stocks that we continue to like in the sector.
Okay, just 1 second, Harshvardhan. We just had the HDFC Bank update flash, and that's the combined might of HDFC along with HDFC Bank. You have, the merged numbers and the update really coming in. If I read the numbers right, I think 62% or so growth in advances, deposits also. But those numbers are very, very strong because you're getting the merged entity numbers in. And 62%, that's 62.4%. That is not a number that you can take lightly. I will get in Abhishek to give us some more color on this and more perspective on this in just a bit. But Harsh, just to come back to the point on NTPC, I mean, you've been positive on that stock for a while anyway. It's had a superb run, 90% up in the last 1 year. What is your current target price and the immediate triggers for NTPC? I mean, how much of an EPS increase would you start penciling in because of these norms? Because now if you're generating above certain thresholds and you have added incentives, right, like you mentioned. So what is the additional EPS you'll pencil in because of the CERC norms? And what are the fresh triggers? And also tell us your target price right now on NTPC.
So if you do back of the envelope calculation, looks like NTPC is set to gain at least 600 to 700 crore prima facie based on, this tariff order. So for a company with a profit of 18,000 crores, it's a reasonably high impact. But rather than tweaking these numbers, I think directionally the regulator has given a very good signal that hey, we are there with somebody who's serious and willing to invest in the sector for long term. And that is the basis for our buy recommendation on NTPC. That if you were to look at the reverse cash flow growth for NTPC, at current market price, the reverse cash flow growth from here till say maybe next 15 years, the implied growth is about 8 to 9%. We think that still the valuations are quite reasonable. And unless the reverse growth throws a number which is 15% plus, which may imply a stock price of more than 400 plus, I think valuations will continue to be fairly stable. So as of now, we'll await for the final regulations and then take a call to revise the target price. But looks to be a safe name to be in the overall sector.
Okay, got it. Thanks a lot for joining us, Harsh. Have a good weekend. That's IIFL with their view on the power space. But